Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek, Kooima Kooima Varilek. We see mixed trade over in the grains this morning. The livestock futures mixed as well, with cattle higher, hogs lower. Scott, let's talk about this cattle market. Finally got the June above the 180 mark. You know, some of this has been pushed by sharply higher box beef values this week and then cash trade, right?
Yep, let's talk about cattle. I like that. So thanks for having me. And it's a it's a great day. I mean, we're trading pretty strong, and I think one of the biggest reasons, well, we've seen the boxes. I guess we can start there. The boxed beef has really started to jump. It's the middle of May. We had Mother's Day last weekend. We've got some great weather, and we've got a consumer that still wants high quality beef, and the demand is good. It's there. So I mean, the retail margins have been huge, astronomical over the last few years, and they're still at it. But I think some of this is going to have to start to spill down to the producer sector, because that's why we have such a small herd. That's what's kind of led us to where we're at. Some of these prices, I feel like we've got tight numbers. We're looking at a lot of different things here, and saw the large placements this fall. And they were all kind of pointing towards the spring. And now I just kind of standing here wondering where are they all, because we've got cash just climbing higher. We were steady for 3 weeks at 187 and a little bit of 188 last week as it started to trickle through the top side. Had those steady bids early on already as cash was pretty quiet last night. Yesterday started to blow up a little bit, getting some 190 from two different outfits, a regional and one, sort of slash major, I guess. So there is some 190 trade, and it's happened in more than one place. So it's not just a one person freak deal. I don't think it's up and down the road, but producers are willing to stand up and say, I need 190, and that's actually where some of these break evens are, upper 180s, 190. So while it feels like we're hitting a home run with that price, it's still not a lot of meat on the bone for some of these outfits. And maybe that's why we've been fighting the market a little bit, but I still feel like producers able to easily sell cattle and have plenty of leverage, and we're starting to see that right now.
So Scott, with June $10 under the board, or under the cash, I should say, do we have room to move higher here, do you think?
It, to me, appears like we do. So June is this little hybrid contract, I guess we can call it. Typically your rule of thumb basis would be $7 under right at the end of April when April goes off. Well, here we are, 17 days into May, and we were $11 under where this cash is at today. So it's got room to catch up. Now, one of the issues there is June is I call it a hybrid because it can kind of be a summer contract. It can kind of be a spring contract. It's harder to digest. It's usually going to meet up with cash at the end. And usually it's a little bit of both. June can rally or cash can come down, but this is probably too big of a discount when we're looking at a small going into the new crop calves, and we got a smaller, numbers to choose from this year than we did the year before. This fall, we're going to have smaller numbers in the feeder market yet again from the year before. So that small supply just kind of catches up. We're ready to roll on to another calf crop of tighter numbers. Now, it's got to stay a little bit closer to August because, the way the delivery is set up on these contracts, you can kind of deliver. You have about 2 weeks into July when you can, actually deliver the cattle. So that's why June has to stay discount the way it is and stay a little bit close to August. But $10 is probably just too much.
Yeah. So we talk about the box beef being on fire here, but some of it is come because the packers have cut kills, right?
Yeah, that was a way for packers to try to get some green ink back. They're trying to actually make some more money as well. Shocker. But they did slow some kills down, tried to make sure they beat it with a drum and used a megaphone to tell everybody that they were, to try to scare some of the cash down. That didn't really work, but it did, on the other side, raise some of these box prices because, the supply is going to be a little bit tighter. And, so they can slow the chain speed down, and we still don't feel like we're backed up. And just slowing the chain speed down in the middle of May, that I don't know that I've really heard that one. Usually we're talking, that January, February mark, your dog days of summer, but not during your peak demand. That's a flag for me saying I don't think these cattle are there. That's just a way for them trying to back it up. Then they got the boxes to rally, but I don't think they're going to see a lot of help from the supply side.
Yeah, and demand, stock market hitting some new highs here and recovering. So that also helps out at least the attitude of the market, doesn't it?
Yeah, 40,000 Dow Jones, that helps. And I think they're so, we got an election year, so we got to hear from both sides how bad the economy is or how good the economy is. But, so you have to kind of try to digest this in the middle here. But high interest rates have been a little bit of a worry, and how healthy is this consumer? But I guess when you see a stock market like this heading to record highs and not really batting an eye, I got to feel like, hey, this is good. I think we have a consumer in pretty good shape, and we're going to see more of that moving forward. So they still are saying, hey, I want high quality beef. They still want what they want, and that's what we're after. I mean, that's why we're seeing some of these. The next step is prime. I mean, it was always choice. I want choice, and then I want upper choice, and now that demand for prime. So some of these premiums on some of these carcasses, even with a narrow choice select spread, still seeing some big bonuses. These guys are getting paid on some of these higher quality cattle. So that all says, hey, I think demand's pretty good. Yeah.
You bet. The only problem that we seem to have is the weights keep creeping back up, don't they?
Yeah, crept up again. Weights that we saw, and it's that little bit of a head scratcher. So yes, I think with the tighter numbers, it helps the packer to say, hey, I'm going to leave these in the yard a little bit. There's a few instances where, yep, I have had some guys that sold some cattle. They're still sitting on them, been sitting on them for a couple of weeks, and others, they go in a couple of days. They need them right now. So I think that's packers still jockeying a little bit, trying to manage some of this, but. Another one of those issues, I talked about those break evens, 188 to 190. That's where we're going to look at a break even right now. So there are going to be some producers fighting the market a little bit here because they're just too scared to sell. And I think anybody can handle a winner. I think the best traders know how to handle a loser. That's what it is. So do you just keep fighting it? And that just seems to be the attitude when you have a loser on. You just want to keep fighting it and try to get bailed out rather than get out. If you have a winner, it's easy to say, yep, take it, cash it in. But so we're willing to cash it in for this amount, but we're really willing to ride it the wrong way, a lot wider amount. So I think that could be just a few producers trying to, handle some of these losers and hoping they get bailed out.
So while cattle are making some new highs for the move, hogs are down this morning. We still continue to see the futures premium to the lean hog index kind of hold that market back, right?
Yeah. Hogs are the only market that can, have a large key reversal higher above a trend line, downtrend line, only to be $1 lower the next day. So it's that whippy action that's driving everybody a little bit nuts right now. But index has been laying, fairly flat, 90 to 91. It's trying to creep, but 91.5 is probably not enough to say we need to get the June board back above $1. We got less than 30 days away from that going off the market. So probably just a little bit of a, having to creep back down to that index. And I think that'll just kind of be your tier for the summer. I could see that index laying, fairly flat as we start to drift down. And oddly enough, there's some nice profits in some of these closeouts on some of these hogs. So that's good. Producers really needed that because it was, not very long ago, just this winter when it was a disaster and big losses. So producers get a little bit of a shot in the arm here, which is much needed.
So let's talk about the grains. Corn is drifting here this morning. We've been down 3 days in a row. We've gone up, hit chart resistance, and not been able to take it out. So that's problematic. Now we're down into support that kind of has to hold here, right?
That's where I'm at. I think the July corn kind of needs to hold this 454 kind of an area. That's where it broke out from. So that's now kind of viewed as support. That was the resistance. Now it's going to be some support. We saw the funds taking off a lot of the short positions. That was part of that rally. And for me, looking at that is that I kind of feel disappointed that that's all we could get, with that large of a short position unwinding out of the market. And that's all we got. Excuse me, all we got. And now we're creeping down to this support to where I think it's going to kind of need to hold here, because if we start to break down below it, it's going to look a little bit, pretty negative on a chart, and I could easily see the funds saying, hey, we might just kind of re-short this market because some of those signals are going to kind of start to point a little lower there.
Yeah. And beans are back up here this morning. Is that still concerns about the South American weather, or at least southern Brazil and some of the problems they're having there? Or is that this big push in the bean oil market this morning?
Yeah, I think it's going to, the Brazil news probably one of my, reasons that I think it would be the biggest reason for it to be moving higher. And I'm a little bit surprised, I guess, some of the producers here, up here as we're getting beans planted. That's one of the biggest questions I'm getting is, when do I start selling some of these beans? This is really going to work at some of these prices. I kind of like this, so I'm handling a lot more questions about that. So, trying to advise, hey, let's find a way to maybe be started, because we're feeling like we've got a price that's pretty good. And as we look at our growing season ahead, we've got adequate moisture to start the year. We're going to get a lot of these grains, off to a great start. So I'm looking at that as the long-term negative. I'll take the short-term positive and kind of say, okay, my long-term outlook might not be near as rosy. So trying to use it to make some sales, and then add that to the wheat market as well. That's had such a big, shot higher here. And as we saw Kansas crop conditions, their estimated yields coming in from Kansas, that's a big crop. So as we start to move north, I'm trying to forward think a little bit. We've had a nice rally on some of that wheat market, and that's also aided in some of the corn. But looking at trying to make some sales in those two markets for sure.
Yeah, $12 beans. I don't think you can pass those up at this point for sure. All right, thanks, Scott. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.